Hello everyone, welcome to Fram HQ, which is currently my house, but hopefully this won't be going on for much longer. I wanted to share with you some of the insights that we've got over the last 4 weeks, because we are in quite a privileged position in terms of information flow. And so I wanted at a very generic level to talk about some of the themes that we've seen in case it's of any use to anybody out there. It's probably worth noting that as it stands today, Fram's quite a well-diversified business. And so for the purposes of this conversation, I'd like to put commerce and industry to one side and to focus on financial services. And I think it's important to perhaps talk about the last 4 weeks in the context of two very different halves. So the first 2 weeks, I think it's fair to say that most companies put their hiring on hold, but it was very much a pause and not a stop. They used the first 2 weeks, I think, to establish themselves at home, to get some routine around management meetings and how they were going to interact with clients. And there's been a huge amount of thought that's gone into working with clients and making sure they're well supported. And then I think the last 2 weeks, which has been really encouraging, certainly I've been very busy. We've seen clients slowly coming back and taking those interviews off pause, and they've started to interview again via things like Skype and Zoom. So it's been a positive, I think, last 2 weeks, which has been really encouraging. But of course, financial services is a huge banner, and amongst that, there are different subsections. And so that's what I really want to do. I want to try and give people a little bit of insight into the various subsections and some of the things that we're seeing. So the first practice for Fram back in 2010 was wealth and asset management. And it's still core to what we're doing today. So we've got a really good insight into this marketplace. And actually, dare I say it, I think that this sector is doing pretty well. Of course, it's taken a short-term hit around outflows. It's taken a short-term hit around new business and prospecting. Clearly, that's not possible at the moment. But if I look at it over, the way that people are thinking, leaders are thinking about long-term, it is an industry that thinks about the medium to long term more than the short term anyway. So I think that it thinks differently perhaps than some other sectors. Dare I say it, it's actually quite a good time for some of the stronger firms to pick up good quality acquisitions. Definitely a good time to pick up good quality teams and individuals. The financial crisis taught me back in 2008, 9, 10, it's a fantastic time for good firms to pick up good people. So if you're in a strong cash position, you can make some very, very good moves now that will benefit firms later on. And actually, my whole time in the city, I've been doing city recruitment, God bless me, for 20 years, there is definitely a correlation between the equity markets and the activity of firms in this subsector. And at the moment, it seems, touching wood, that the equity markets have stabilised a bit. That probably means that money's coming back in, doesn't it, into the market? So, there've been big outflows, but I suspect there's going to be some interesting data around inflows and confidence. And, if the equity market stays at this sort of level or even ticks up a little bit higher, bear in mind the stock market's 6 to 12 months ahead of the real economy, then I think wealth and asset management might ping back quite quickly, definitely in the second half of the year. Other areas we've got good exposure to. So private equity, you have to divide it into the types of firms and what they're doing and the types of targets, actually. So if you look at small cap, you start drifting into the VC world as well. I think that's been quite badly hit in the short term. I believe from what I read in the press, the government are coming back with a package specifically around the startups. And so hopefully that's a blip. For large mid-cap private equity, I suspect that barring one or two challenges, this is quite an interesting time for them. Certainly the meetings that I had prior to COVID-19 coming into our lives were very much around, we have a lot of cash, dry powder as they call it. They're sitting on a lot of dry powder, and their biggest issue was valuations. And so, again, it sometimes feels uncomfortable talking about the future and opportunity in what is a very difficult time for a lot of people, and not making light of that at all, but thinking about the future. I suspect that a lot of private equity firms now have seen a lot of target companies come into play, and they're now eyeing up some very interesting acquisitions. So I think it's watch this space around private equity. Two other areas that we work with, real estate and specialist stroke alternative finance. So taking real estate first, I said in a LinkedIn post about a week or 10 days ago that if real estate had a relationship status, then unfortunately that would be it's complicated. From what I understand, the supply chains have been massively disrupted in real estate. I can't imagine there'd be a buyer alive now that when all this ends, who wouldn't be looking for a discount on the residential side of things. Of course, commercial real estate is having issues around and payments. But again, you can see a situation where supply chains are re-established, building gets going again. Commercial landlords, it's going to be interesting to see how that develops. But if lots of their clients come back and start paying again, then hopefully they'll right themselves. But real estate clearly is a challenge at the moment. And then taking specialist finance, maybe they wouldn't thank me for talking about alternative finance, but actually this sector's been great. It's a very client-centric sector. It's probably sometimes overlooked, but historically it's always had good margins and it's had good growth rates. And people are working really, really hard to make sure they can help clients in some difficult situations. I believe that a number of firms now are getting involved and will probably be more into the government interruption loan scheme. I think that's a massively positive step. These firms are very good at assessing risk, very good at getting money out the door. So I'm delighted to see that the talented people in this sector have been involved in the wider kind of rescue package. And just talking about banking in general, it's been really interesting to see how the media has dealt with the banking industry. Again, not kindly, probably unsurprising after what happened in 08-09. But maybe we need to look at this in the context of, it's been an incredibly challenging situation, as we all know, not just for the banks, but for the Treasury as well. Frontline bankers are human beings. Their first reaction is they want to help. They want to get money out the door, but of course they have to do it around the sensible constraints of their own organisation, their bank, but also they have to follow the Treasury guidance. And again, from what I read in the press and understand, maybe that guidance, very understandably at first, wasn't so clear because none of us really have worked in a pandemic environment before. But I think all that's been cleared up and things are accelerating. The one big thing I think that we need to see coming out of this is how the government is going to deal with the end of furlough. From talking to a lot of firms and from talking to a lot of people, I think what would be enormously helpful, and I think that the Chancellor would be missing a trick, if he didn't somehow taper the end of furlough, some sort of gradual reintroduction of staff back into clients' businesses, so that they can ramp up as demand increases. I think at the moment the biggest challenge for most firms is visibility, and so if the furlough tap is turned off immediately, you might find that there's a knee-jerk reaction and a negative reaction in the employment market. So, I would strongly hope that somebody somewhere is thinking about a way of phasing employees and supporting firms and phasing employees back into the workplace. So as our pipelines are re-established, as our supply chains are re-established, demand goes up and people come back in. But as I said to you earlier on, amongst what is a difficult time, there is opportunity. I've been really busy. I know lots of other people have in the last couple of weeks. There are some fantastic candidates on the marketplace. There are some fantastic teams looking to do things. And I'm sure acquisitions as well. So we need to look to the positives. And of course, there's anything we can help you with in terms of insight or as that recovery builds, and please don't hesitate to contact me or one of the team.